Welcome to It's the Economy. It's a monetary policy special. If the Reserve Bank and the MPC were announcing their policy last Thursday, no one would be in any doubt about it being a status quoist policy with practically no surprises. But the world has turned topsy-turvy in the past 1 week. Rate cut expectations from the Fed, which stood at 25 basis points in September, only one cut in 2024, just 1 week ago, have now increased to 125 basis points of cuts in 2024. Many expect a 50 basis point cut in September itself, if not intermeeting. So is the Reserve Bank likely to sound more dovish or sound different? To answer this, I have with me Santanu Sengupta, Chief India Economist at Goldman Sachs, and Rajeev Radhakrishnan, the CIO-Fixed Income at SBI Mutual Fund. Gentlemen, thank you very much indeed for your time. Well, first, Shantanu, to you. How has the Goldman Sachs view altered about US economy, rate cuts and global economy since the non-farm payrolls of last week?
Yeah, thanks, Latha. So the markets obviously have experienced a sharp de-risking, but that was mainly the unwind of the carry trades, which started with the BOJ and then has been exacerbated with the US employment report. Overall, our US economics team have raised their 12-month recession odds by 10 percentage points to 25%, but that is slightly higher than the historical unconditional probability of a 12-month average of about 15%, because every 7 years you have a US recession, so the unconditional probability would be about 15%. Overall, they still continue to think that the recession risk is still limited, and they're less pessimistic on the state of the US labor market, mainly because 70% of the increase in the unemployment rate in July came from temporary layoffs, which might reverse in the future. They have revised their Fed funds forecast to 25 basis points each now in September, November, and December. They had 2 cuts earlier. And only the risk of a 50 basis points cut in their view comes about if the August employment report is as weak or weaker than what we saw last week.
Okay. Well, let me get Rajeev into the conversation. Rajeev, as Shantanu points out, it's not the market view. The Fed funds rate may be 125 basis point. But, there are a substantial number of people who believe it will be one cut each in September, November and December. But nevertheless, the Reserve Bank is going with a different worldview. So do you think this, first of all, how many cuts are you expecting, and how do you think the Reserve Bank may respond to this changed worldview?
Yeah, in fact, it's quite interesting when you look at the market implied pricing from the Fed funds futures. So you did mention about 100 odd basis points. In fact, I think a couple of days back, it was probably 150 basis points of cut priced in for this year. I think a 50 was completely priced in for September. You had one more data point the other day on ISM services, which was slightly better than what the market feared, and you had a bit of repricing again. So I think the moot point here is we have seen these episodes of frequent repricing of market expectations with respect to the Fed policy rate trajectory. And I think at this point in time, from the RBI's perspective, what I would I would look out for is they will clearly mention the risk about which is coming in from external market volatility, because we've seen that happening before. And I think going forward, financial market volatility driven by markets repricing expectations on Fed policy actions, I think that will be a recurrent theme. And I think the RBI should I think they've noted that in the past, and I don't see anything significantly changing with respect to RBI's assessment on domestic monetary policy. This is a risk factor which is there, which has been flagged off before. But I think we need to look at far more data points to really form an opinion whether we are seeing a recession. Growth slowdown, clearly, yes. But is it really going to a recessionary phase? I mean, I think we need more data.
Yeah, we know. It's just that all of us got excited by the SAM rule that unemployment, if it is 50 basis point higher, the 3-month unemployment average is 50 basis higher than the lowest point in the last 12 months, then a recession follows. But
I think
Shantanu,
on that point, ma'am, if I could just add, I think the Sam rule also, I think she's talked about this probably not being relevant in the current context as well. So I'm not really sure to what extent you can extrapolate from that.
Okay. No, fair enough. Oh, I didn't know that Claudia Sam herself had said that. JP Morgan clearly told us it's not relevant. But Shantanu, see, Rajeev also is repeatedly speaking about slowdown, yes, but not necessarily a recession. Will that tell on Reserve Bank's assessment of India growth? I mean, there is a certain global growth that was assumed, and US resilience was very much a part of that. The last time, the IMF and the World Bank actually inched up the 2024 GDP numbers for global growth. So do you think they will give a downward bias to any of the growth or inflation estimates?
See, the RBI's growth number is probably on the higher end of where street estimates are. We are, for instance, about 40 basis points lower than where the RBI is for fiscal year 25. If global growth is slower, which is, then that would bake into our forecast, as we would bake that into our forecast as well, and probably shave growth a little bit. But I think what the RBI has been trying to emphasize, and the governor has been making this point, the deputy governor, whether it is in the press conference, whether it is in the monetary policy statement, is that the domestic economy is less linked now with the global cycle, especially the Fed cycle. I think they're calling out, we are relatively more immune from the Fed cycle. The main channel of transmission of global monetary policy into emerging market domestic monetary policy is the FX channel. And the whole reserve buildup has been to isolate out domestic monetary policy and therefore just run it on the basis of domestic growth inflation trade-off. So I think with all this noise going on the global front, while they will call it out, I think the governor or the RBI is likely to remind us that domestic monetary policy decisions will remain very much anchored to where the inflation path is and where the growth path is for India.
That's 100% he's going to tell us that. But I'm not asking you about whether 125 basis of Fed cut will impact RBI. I think it will, but that's a separate point. I'm asking you whether will there be a downward bias to growth? Because the world is growing slowly. As it is, I think in your last PMI report, when you analyzed, you pointed out that the export numbers are a little weak, very, very slightly. There could be an impact on Indian growth as well, isn't it? Will there be any indication at all? And even inflation. Look at the deflationary force that China is, casting on us. NMDC today cut, iron ore prices yet again. I'm just asking if there'll be a downward bias in any of his growth or inflation forecasts.
So firstly, on growth. For India growth, clearly, if the global economy is much slower, that will have some downward bias. But I think domestically, given where the fiscal stance is and the fact that personal loans growth, given the macroprudential norms by the RBI, will slow down, that will provide some downward bias to Indian growth as well. But still, we are talking about a number somewhere in the region of 6.5% to 7%, which is fairly solid. On inflation, there are two very distinct parts. On core inflation, clearly global prices is feeding in, core goods inflation is remaining weak. Core services we'll have to see, because the housing rents inflation at around 3% at this stage of the cycle is quite intriguing. Food inflation, clearly, there has been upward biases until now. The monsoon has picked up. It's still, the distribution is uneven, and the RBI would like to wait and see where the monsoon pans out until the end of September to take a call on where inflation would rest for the next quarter and thereafter. So I think it's not really a linear question of, if global growth is slower, whether India growth will be materially weaker or not, because, we are still a very much domestic demand-driven economy.
No question of being materially weaker. It's just at best a downward bias getting indicated. Rajeev, to come back to the rates and the stance, when you went into the policy with an expectation of one Fed rate cut, and when you go into the policy with 5 rate cuts expectation, is there a chance that he will flag off a stance change? Not change the stance, but flag it, prepare the markets for it?
I would say that a change in stance possibly could wait a couple of months. That's my sense. But what is important to note is beyond the stance, when you look at where the operating rate is, that's clearly now anchored lower than the repo rate, which is material. I think that's clearly something that we are underplaying today, because for a long period, we've actually run the system at the MSF or the upper end of the rate corridor. Now, over the last couple of months, clearly with liquidity coming back into the system, we are operating below the policy repo rate. So there has clearly been a better anchoring of the operating rate, which is probably far more relevant from systemic perspective, because even repo rate was at 6.5, we were operating at 6.75 for a long period. But today that's not the case. So I guess what the RBI could have done in that context, they've already done. So a stance change will only happen when they have visibility on inflation aligning closer to their target.
Okay. So very quickly, I mean, I'm warned I'm out of time. Santanu, what will be the thing that you will look out for as briefly as you can?
I think they will try to tone down their guidance a little bit, from the extreme hawkishness that we have seen earlier. And I would completely agree with Rajeev that, you've already seen a 25 basis points of rate cut through the ease of liquidity and, having the overnight rates closer to repo from the MSF earlier.
Okay. And Rajeev, what will be the one thing you will watch out in the speech?
Yeah, just one thing. So I just want to get hopefully some answers on why they're doing OMOs on the screen. That's
okay. All right. We'll try and squeeze that question if we have time. But I somehow expect it to be a way more cantankerous meeting. Already 2 people have voted for a stance change and a rate cut last time. This is the last meeting of the external members. They change after this. And they have a very good reason now to press home their point, because, the global growth is clearly taking a turn for a slight worse. So I'm wondering if something will be flagged off on the stance. I'm trying to make it interesting. I'm hoping it's not just an as usual status quoist policy. Thank you very much, Santanu and Rajeev, for enriching this conversation and our understanding. Let's see what happens tomorrow. Wrap up on Bazaar Chartbusters.